during these times, we're reminded that of the things that really matter. People matter and connections matter. And so what Rich and I wanted to do is really just connect with each of you today and bring you what we think are some relevant information about the opportunities that are in the new CARES Act that was just passed and just signed, because we really are excited about it. We think it's one avenue for a lot of our customers to get really beyond this virus and get on to the opportunities that I think are going to be there on the other side of this. And so one of the reasons we've got the opportunity to bring you some great information is because we've got Rich Bradshaw here with me. Rich is our Chief Banking Officer here at United. And in addition to running all the revenue areas of the bank, Rich has a long history with SBA. He's actually run two nationally ranked top 10 SBA lending operations. He's run another one that's been in the top 20. He's been involved with the National Association of Government Guaranteed Lenders for many years, serving on their board and on their executive committee. So a real expert in this area. And so, Rich, I want to thank you for joining us today.
Thank you, and good afternoon to everyone.
We know we've got a lot of questions. We had intended actually to have this open for questions, but we've ended up with over 3,000 people sign up for the call. So again, thank you for your interest. With that said, we won't be having open calls, but we are working in many of the questions that you sent beforehand into the presentation, and we're going to follow this up with a list of frequently asked questions coming from those that you sent in. And of course, we'll be here and open for other questions too as we go on. But I guess before we get started on the main thing we want to talk about today is what's called the Paycheck Protection Program. I think, Rich, we got to shorten that to PPP.
Yes, sir.
We want to talk about that program and a couple of the other SBA programs, but we got a lot of questions about some of the other SBA programs, specifically the economic injury disaster loans. And so, Rich, before we get started on PPP, Paycheck Protection Program, what are some of the differences between the disaster loans and the PPP program?
There's a couple big differences. Probably the main one is the disaster programs are directly through the SBA. By that, I mean they're accessed through SBA.gov, and we're not involved. They're a little broader in terms of eligibility and use of proceeds. And then, of course, the PPP is done through banks, in our case, United, and we do that directly ourselves.
Right. So that's one of the points I want to make for the listeners on the call. We are the PPP program is, I would call it, running on the rails of the SBA 7A program, which is traditionally what banks have done and processed. So we're very familiar with that program. And the disaster programs, the SBA does directly. So we are not as expert on that program. There are some things though that we can point out about the two programs. One of the questions we got is, can I apply for both of these kind of loans?
And the answer, Lynn, is you can. There's an important point in this, and that is you want to pay a particular particular view of your use of proceeds. So an example would be a manufacturer. If you're going to use the disaster program, probably encourage the manufacturer use these proceeds for inventory versus the PPP, which would be payroll related or operating expenses of the company directly. And so you can't use the same proceeds for both.
Yeah, that's right.
That's really the key thing.
Yeah, so it's so again, the PPP is specifically for payroll, rent, utilities. We'll get into that. And so if you apply for both a disaster loan and PPP, there's absolutely nothing wrong with that. But you can't use the same use of funds for both loans. So you would say, for the disaster loan, maybe it's for inventory purchase, as Rich mentioned, or some other purpose other than payroll. Now, there's another interesting thing about the disaster loan that once you make application, your application's processed. If you request it, you're also given a upfront, essentially a grant, is it not, of $10,000? Is that correct?
That is absolutely correct.
And now, we're going to get into this later, but is there any implication to receiving that $10,000 with the PPP program?
It's a great question, and the answer is there is a small challenge to it, and that is there is a forgiveness of debt component to the PPP loan, and if you do take the $10,000, then that's subtracted from what you would get in forgiveness of debt. So you can't have both.
Can't have both. So, but again, there's no, I would call it no harm, no foul of applying for both. So to the extent, particularly smaller businesses that might be more strapped for cash, I would say go ahead and apply for under the disaster program, as well as applying under the PPP program as well. So, you know, I am excited about this program. So let's shift over now to that PPP program. And since we're talking about qualifications and 7A, et cetera, so Rich, why don't you tell us who qualifies for this Paycheck Protection Program?
So the good news is SBA has expanded the number of customers who will be eligible under this program. Let's start with the fact that all businesses that have traditionally qualified do qualify. That would include nearly all small businesses, sole proprietorships, and professional service organizations other than real estate developers and commercial real estate companies. In addition, for this program specifically, SBA has added the eligibility of 501c3 nonprofits, and that definitely is a new change.
Yeah, that is news. That has been available under the disaster program in the past, but has never been available under the 7A program. So does that mean, though, that all 501c3 are eligible? For example, what about churches?
So we are still waiting the guidance from the SBA on some specifics on the program. We think that traditionally that churches won't be eligible because of the separation between church and state, but we'll get that guidance from the SBA. We're waiting on that.
But we do believe that nonprofit schools, arts organizations, et cetera, we do believe that they would qualify under this program. That
is correct, sir. Also wanted to point out one other change. The businesses need to be fewer than 500 employees. For the purpose of this program, though, the SBA is relaxing its rules to say that as long as the company has a NAICS code of 72, that is accommodation and food services, one of the areas hardest hit by the virus, the company can have more than 500 employees as long as there's not more than 500 at one single location. And this is great news for hotel and restaurant franchises that have multiple locations.
Yeah, that's a great point, Rich, because that is a traditional 7A requirement that, you know, you have less than 500 employees. And I think so them taking the approach to, in these hardest hit areas, to expand that definition, I think is a really, really great thing. So a couple other questions about traditional kind of non-qualifications, if you will, for SBA 7A programs. Now, in the past, there's been a revenue qualification. In other words, you had to have revenues below a certain amount to qualify. Is that still the case?
For certain NAICS codes, that was the case, but that is not in play under the PPP program. That has been waived.
That's great. What about another question we got is, you know, under the SBA 7A program, traditionally, there's been a requirement that the borrower had to say, or a bank had to certify that they weren't able to get the loan on the same terms elsewhere. Is that requirement in the PPP?
So that's what we in our business call the credit elsewhere decision, and the good news is that has been waived under this program.
Great. So again, one of the reasons we're excited about this program, it really has pretty significantly expanded the eligibility of companies that would traditionally qualify for an SBA loan. So let's say I qualify. You know, the next question, you know, I want to know is how much can I borrow?
So that's not an unusual question. I'm sure everyone on the phone wants to know. The maximum loan amount is the business's average monthly payroll cost times 2.5, up to a maximum of $10 million. And payroll costs includes compensation, so wages, commissions, and tip income, as well as several other employee-related costs, including health care insurance premiums. It is important to note that there is a limit on the maximum amount of compensation per individual employee, and that's $100,000. There have been some questions. If someone made $150,000, is that completely all of it not counted? No, they count, in that example, they count $100,000 of the $150,000.
Perfect. We also got the question is, what about the owner? Can the owner qualify for that same $100,000 and put that in the calculation as well?
And the answer is yes, in the exact same manner as we just talked about, up to $100,000.
Perfect. You know, another thing that they've expanded in this program is that contractors or 1099 employees can qualify for this as well. So we've got some questions about, so let's say I'm a consultant, I'm a 1099 employee. Can I qualify for this? Can I use my past?
And great question, Lynn. And as we read the statute, it says we think it's yes, and we're waiting for that specific SBA guidance to make sure, but we believe that to be the case.
So up to $100,000 annualized.
Same limiter.
All right, great. So then another question we've gotten is, well, what? So I understand my maximum loan amount is my average monthly payroll cost times 2.5. That makes sense. You know, but what? So Rich, what period do I use? Is it my average in the fourth quarter? My average same time this past year? What is my average monthly payroll cost?
So let's assume for the answer that the business was open all of 2019. The average would be the last 12 months right before your loan application.
So the date of the loan application, the previous 12 months, your monthly average payroll cost, which, as I think we mentioned, the payroll cost is more than just what we traditionally think about it. There's some details in the Act that you can read, and we'll put the answers on the website. But so for that 12-month period, that's your average monthly cost. Now, but what about if the business wasn't open for all of 19?
So they have addressed that. They realized they couldn't capture everything. So what they have said is to use the monthly average of January and February times 2.5.
Perfect. All right. So now I know I qualify. I'm working with my United banker to figure out my maximum loan amount. I've got that done. Now, are there limits? You know, what can I use the money for?
Well, it's a great question, and not surprisingly, the way the loan is calculated and what the funds can be used for are related. Remember, the goal of this program is to jumpstart the economy, to reopen businesses, and obviously hiring people is probably the main thing of it. Therefore, the government wants to use the funds for payroll costs, interest on any debt the business incurred prior to February 15th, rent, and utilities. In fact, the government is so interested in using these funds for these reasons, if you do that, they're willing to forgive a portion of your loan.
Okay, so that's very unusual. You know, here at United, we don't forgive many loans. But, what part of the loan can be forgiven? How do I figure that out?
So it's the amount to be forgiven is the cost of 8 weeks of payroll, interest, rent, and or utilities. That is the amount that will be forgiven when the documentation is presented to the SBA through the bank. Obviously, the forgiveness cannot be more than the face of the note, but that's how it's done.
All right, so I got a really great question from one of our listeners, and they asked, well, will it really be forgiven? And so, you know, I would ask you, Rich, with your experience in dealing with the SBA, you know, when you provided them the proper documentation, you know, how confident are you that it actually will be forgiven?
So the regulators asked me the same question regarding our guarantee, and I answer it the same way. In doing this for 25 years, I've disagreed with the SBA once, and I did appeal it once in 25 years, and we won the appeal. So I feel very confident that this is the case. I was on an AGO conference call earlier in the day, and they did stress that record keeping during this period of the 8 weeks is absolutely going to be critical. So help us help you and capture really good records of your payroll, interest, rent, utility payments during this 8-week period, and that's what we will submit to the SBA.
Perfect. All right, so as you mentioned, it is primarily to support payroll. So are there any, there's some takebacks on the forgiveness amount too, right? What are the general things to look at there as you think about how much of the forgiveness you might potentially lose?
So another great question, and this one has to do with not dollar revenue of your salaries, but actually full-time equivalents. So said a different way, your number of full-time employees during the 12 months, and then what that looks like during your 8-week period. And the government would like those to be equal. Right. And then you get 100%. But if those aren't equal, then you're going to get a pro rata share.
Right. So I would point out too, so in other words, so if I had 20 employees during my calculation period to get the loan, I still can obtain the loan amount based on those 20 employees and the cost of all those 20 employees. But if I've had to lay off some now and only have 10 employees now, the amount of the loan that will ultimately be forgiven will be reduced somewhat.
That is correct.
Now, I will point out too, though, my understanding is if you rehire those employees, so if I rehired those 10 employees by June 30th, then they won't look at an average, it will not reduce the amount of potential forgiveness that I receive.
That is how we read the statute and the spirit of what they're trying to do, because again, they're trying to have us rehire people, trying to put people back in jobs.
And
let me interrupt you real quickly here. So before you ask, just to make clear, if there is forgiveness of debt, the SBA has worked with the IRS, and there is going to be no implication of income on your taxes from the forgiveness of debt.
Perfect, yeah, because I was going to ask that, and in fact, we had several questions on that, and so that is good news. So this forgiveness of debt will not be included on your tax returns income.
Yes, so it'll have no negative implications.
That's great. All right, so now, but then, well, what about, so I've gone through and we've gone through the calculation, we've figured out that we're at the end of the 8-week period, we figured out the amount that's going to be forgiven, but there's some of the loan potentially left. So is that amount of the loan that's left, am I going to have to immediately pay that back, or what happens with that loan?
So the remaining balance will be termed out over a 10-year period, fully amortized at 4%. The other good news with regard to this loan, there are no fees, no personal guarantee, and no collateral.
Yeah. All right, you got my attention with that. That's pretty good. So what would our customers need to do to get started?
So for our customers who are on this call, we plan on making that as easily as possible. Just a reminder that United is a preferred lender for the SBA, so we'll not only be able to process the PPP loans for the SBA, but we'll also have the ability to approve them on behalf of the SBA, which will greatly enhance our speed of loan approvals, and then we plan to put those loan proceeds in the United checking account.
All right, so I just want to make sure I understood that. So even though this is an SBA program, you and your team at United actually have approval authority, so you can actually make the approval decision.
That's correct, and it might help people understand the process. We do everything on our end, and we effectively shoot an electronic record to SBA that has the borrower information. It has no approval information. It just has the information required by the government. And about 20 seconds later, we get an email back with the loan number on it, and that's what we need to have an official SBA loan.
Perfect. So, tell me more about what you're doing to get ready.
Well, we have been very, very busy, as you can imagine. We've been building an application portal, which we expect to have up shortly. We plan to have the portal on our website, and we'll email a link to everyone on this call when that is up. Again, just a reminder, the SBA has not finalized their guidance, and so we're waiting on that. I say what you can do in the meantime is get your payroll tax filings, report to the IRS for your last year, and collect Form 1099 if you had any contractors or did contracting work as sole proprietor. I think that's the key things you can do right now.
That's right. That's right. Good. So, again, back to the economic injury disaster loans, one of the questions we've got, because this sounds like, and I'm excited and appreciative of our technology teams that have been working to put this portal together. I got a question from someone. So if I've already started a disaster loan with the SBA, or potentially already finished my application, can I just change that over into a PPP loan?
I think that's one of my few only bad news of this conversation, because the SBA system doesn't talk to our system. So unfortunately, we're going to need a new application. But I will tell you, in the 25 years of doing this, this will be the most streamlined application that the SBA has ever done. There's very little information required.
Perfect. And in terms of timing, what's your expectation?
So I would note that we're doing everything. We'll be ready this week. So as I mentioned earlier, I was on a NAPA call earlier today. They're getting intel that the SBA could be ready this week for guidance. And so when that happens, we'll be ready to go. And that's the latest intel I have on that. As you could guess, there's a lot of political pressure on SBA to get this done as soon as possible. And we're just doing everything on our end to be ready to go when that thing is live.
Perfect. So what I'm hearing is we've got to get the final instructions from the SBA, which we anticipate literally within a week. They've got to get their website ready for this new program, so that under that new program, they can send us that guarantee number that you mentioned. And beyond that, then you're saying we'll be ready to go.
Yes, Lynn. Again, I think good news for our customers. Again, we're a preferred lender. We have the pen. We're making the loan decision, or the guarantee decision in this case, with the SBA. And I think, one of our competitive advantages as a preferred lender and a organization that happens to do a lot of SBA volume already, that we're already ready for this. This is just going to be in a much bigger volume, and that's why we're using the entire big team.
Perfect. So is there anything else that a borrower should know?
Yes, there is one important thing, because it also plays into the debt forgiveness aspect of this act, and that is that the borrower will be asked to make a good faith certification that, number one, they have been negatively affected by economic conditions, and number two, the use of proceeds will be used to retain workers and maintain payroll, or make mortgage payments, lease payments, and utility payments.
So what if I wanted to use the proceeds for something else?
Well, that's also a good question. Now remember, this loan doesn't have a personal guarantee or collateral. However, the statute says, and the federal law says, I know it's absurd, but if someone were to decide to take this use of proceeds and not use it as intended, and instead did something very unusual, like bought a yacht and they're not in the yacht business, and they defaulted, the government would absolutely go after them personally and has the legal right to do that.
That's right. But again, I would think that's a low probability, but it's good for you to mention it. So another question I've got, because you mentioned in here that in your comments that I would be asked to make a good faith certification that I've been negatively affected by economic conditions. Of course, we all have felt economic conditions. But one great question was, historically, the SBA has asked you to prove that. So are they, to your knowledge, do you believe they're going to ask for any proof that you've been economically impacted, or just simply a certification from you?
I believe that the SBA and the House and Senate believe so strongly that everyone's been affected, that just this certification is going to cover it. And I don't really think they're wrong in that.
Yeah, I agree. All right, so the final question on the Paycheck Protection Program, and then I'm going to ask you some questions about some of the other great news for existing SBA 7(a) borrowers. But relative to the Paycheck Protection Program, when does this program end?
So there's two answers to that. One is June 30th, 2020, or number two, when the maximum amount of $349 billion is obligated by the SBA. It's whichever one of those comes first.
Yeah, and I would, we got a lot of questions about, when might the money run out? Do I need to rush to the front of the line? And, I would say need to do it as quickly as you can get the information together. But I would say this is significantly more than the SBA it traditionally does. So this.
So yeah, to put that into context, in the 7A 504 program, in the 28 billion a year is what they do on an annual basis. So this is very significant.
Perfect. All right, so let's cover two other quick questions that our existing SBA borrowers might be interested in. So first, if I already have an SBA loan, so I've got a 7A or a 504, can I also get one of these loans?
Short answer is yes.
That is short. All right. Another question that I got was, how does a PPP loan affect my other loans at the bank? So do I need to so let's say I have a mortgage loan at United Community or an equipment loan. Do I need to get them to approve me requesting a PPP loan?
No, absolutely not. This is separate and kind of overrides everything.
And since it's unsecured and, again, no guarantee.
No collateral,
no
so
collateral.
This doesn't affect any aspects of that of an existing loan.
Yeah, perfect. All right, so speaking again of customers that already have an SBA 7A loan, how about tell me now about the debt relief program, which is another program. So we have the disaster loan program we talked a little bit about. We've got the Paycheck Protection Program we've now talked about. But so this is a whole new program, the debt relief program for existing 7A borrowers. Tell me a little bit about that.
Yeah, this is exciting as well. And then what it really means is if you have an existing 7A loan, going back to the statement, how do you say that you've been impacted negatively? The SBA and the House and Senate are thinking everyone's been impacted negatively. So they're going to make your interest and principal payments on existing SBA loans for 6 months. So you say that again. So you're saying that they're actually going to make the payments for me. The government is going to make my payments, and they're not going to ask me to pay that back to them? That is 100% correct.
Okay. So that is exciting. And I'd also add that the lender that made you the SBA loan that we're talking about, if you've got an existing loan, might be willing to defer your payments for as much as 6 months. Now, those payments that would be deferred by your lender would be added to the end of the loan. But with the approval of your lender, you could go as long as 12 months for an existing 7A SBA loan without making a payment, and the government would make 6 of those payments for you. Is that correct?
That's absolutely correct.
Great. So, well, Rich, I think there's going to be tremendous demand from both our existing and new small business customers for these programs. I mean, they're exciting programs. So knowing that, are you sure that you're ready? Your division's ready?
I feel really good about this. We have one of the largest, most experienced SBA divisions of any bank in the Southeast. We've got a great leader of the SBA division, Beth Halleck, and I feel confident that we are in a better position than many other lenders to serve the customers in need. With that said, we know the demand for this program is going to be enormous, and we are putting into place a contingency plan to effectively deputize the community bank and our other specialty lines of business to all support SBA. Our SBA department will be key in providing program-specific expertise, including eligibility and funding. And as you said, Lynn, we're working with our technology and marketing teams closely to develop online application, electronic signature for the specific program. It's pretty much all hands on deck.
Yeah, it is. Well, we're excited about it, and those are the main things that we wanted to cover on the call today. So again, just thank each one of you for being interested enough to listen. I know many of you may want more information, and what we're going to do is a couple of specific things. One is based on the questions that you've already sent in, we're putting together a question and answer list that we will both email out to you over the next day or so, as well as we're going to put those on our website, but we will get those to you. And again, as Rich mentioned earlier, as soon as our application portal goes live, you will also get an email notification of that. So we're really excited, and want to tell you, each of you, how much we appreciate you being here. We want to continue to provide insight and guidance as we get it, and as we think it'll be valuable to you. Rich, anything you would like to say in closing?
Well, I'm just feeling really blessed that we have the big SBA division at the right time to help our customers. I think this is going to be a really unique moment in United's history to help our customers, and we look forward to that privilege.
Great. Well, thank you, Rich, for being here and your leadership, and thank all you on the call, and we will talk soon. Goodbye.